Hey, what's going on, you guys? Welcome back to another YouTube video. And on today's video, it's going to be a very educational video. I want to go ahead and summarize a concept that I haven't really gone over with a lot of my beginners or individuals on here on my YouTube channel. And I know a lot of you guys have probably, taken those first steps into trading, and you probably heard about, this term and haven't really gotten too familiar with it and how to understand it to trade profitably. So today we're going to be going over market trends. I'm going to be going over macro trends and micro trends, so you guys understand the difference and how to go about trading them to be able to create a profits in your trading, and I guess you can say understanding when to take profits. So in front of me I have Tesla chart, and to kind of give a little bit more of context around why is a market trend important, right? When you're dealing with a market trend, you're usually going to have two different trends, or potentially three. You have a bullish trend, which many of you guys, if you have already been familiar with the trading space, a bullish trend just means that the stock and the share price is going up. And then the second trend that I think was like the middle, it's a consolidation point, meaning that the market doesn't know if it wants to buy or if it wants to sell, and it's kind of just going sideways. The third and final trend that you have is a bearish trend, which is when there's a more, I guess you can say, seller market, less buyers, and share prices coming down. And every single trend has a specific way of trading it. Some individuals oftentimes lose money going against trends or mistiming, or I guess not being aware of the market trend, and oftentimes just make the wrong decision making that costs them a handful of capital. So I'm gonna go ahead and break down the three different trends, how to identify them, how to trade them, so you guys could go ahead and have a little bit more, I guess you could say, context when going about your trading day, and just learning how to, I guess you can say, build a better experience when navigating each one. So alright guys, so let's go ahead and jump into an example of understanding trend lines. And before we begin, it's important you set yourself on the right time frame. So there's going to be multiple trend lines that you want to be conscious of. There's the macro trend, which is what's happening on the grand scheme of things. It happens when you notice and track more data. So to track more data, to kind of build you guys with a little bit more familiarity, the bigger the time frame, the more data you're going to have. And let me go ahead and explain this. So if I go ahead and look at something like the 1 minute, right? I'm going to look at the data for just that current trading day. So this current trading day is going to have its own independent trend. It's not going to be correlated too much to what's happening on the macro side. If I collect more data, you see how the trends now look a little bit different. So don't get confused and make sure that you perceive this the right way. So I typically, when I'm collecting my macro trends, so I know what kind of state is this asset in. Is it in a buying territory or is it in a seller's territory? You got to get familiar. So I use something like the 1 hour. Once I'm on the 1 hour, now we can kind of identify, hey, Tesla has been going on what we would know as a bearish trend, being sold off as an asset. And I also add this to you guys because a lot of individuals oftentimes get a little bit confused with how much data, how far back do they need to look to make a decision. And I share this with you guys because it can get confusing, but I don't want you guys to feel like that. And it's important that you notice that, hey, when you're collecting data for the next potential trading day or maybe that trading week, you don't have to go back multiple months, sometimes multiple weeks. For example, like me, I only went back as far as maybe 3 to 4 weeks because you're typically going to be trading for the midterm to short term. And I'd argue, if you're going out with longer expiration dates, sometimes swing trading, potentially maybe 3 weeks, a month, 2 months, that's where you want to maybe look further back to collect more data, but still adding more time. You don't feel like you have to pay attention to what happened in April, what happened in May. A lot of these trades, they happen in somewhat of the mid or short term. So it's important you collect the data from the right time frame. So something like the 1 hour will show you that, and you don't have to go that far back. So now we're noticing that we're breaking this bearish trend. I have this bearish trend line, but you notice that it looks like on August 3rd, we broke it. So what's happening? We had a bearish trend coming down, but now we got that break of the bearish trend, and we're beginning to form a bullish trend. So what we know this as is called a break of structure. So a trend is oftentimes going to be referred to as market structure, and don't get confused with them. They're just synonyms, a way of describing what's happening in the market. So when we get a break of structure, well, initially market structure is the trend, the break of structure is the change of the trend. So when you see you're going bearish and now buyers are breaking out of that bearish trend and now you're pushing bullishly, there's two things that you have to be aware of here. When there's a break of structure, it's not always going to be a straight break to the bullish side. Sometimes you'll see the third, form of trends, which we know is consolidation. And of course, there's buy scenarios. Every trade, every asset's going to be performing differently. Sometimes it can break into a direct bullish trend. But be aware of that point of consolidation so you don't, catch yourself placing any trades with maybe a shorter term expiration or a longer term expiration. And now because you're stuck in a point of consolidation, theta is eating at your position because the share price isn't moving to what you need it to be, whether it be out the money, in the money, or at the money. So it's important that you guys understand these concepts because they're pretty intricate, but don't let them overwhelm you. Don't feel too, I guess you can say, discouraged. It's just something to be aware of while trading. So when you are taking trades based off, what the market structure or the trend is, you have to know how to pick the right amount of time behind your trade to potentially prepare for some consolidation, or potentially prepare for that break of trend, or potentially prepare for maybe a rejection going back towards the downside. So you got to treat every scenario differently, but you also got to know how to interpret them all separately so you can distinguish what's happening. So here we kind of got now the first trend, bearish. Now we got a break of structure going bullish. But what I want you guys to notice, this is now the macro. See how I'm gathering all this information using the 1 hour? But when we go to the micro is where you see the shifts. So the macro trend is what you see in the bigger picture. Typically the time frame you're going to want to notice and see this from is probably going to be maybe 3 weeks out in the past to maybe now present day. And now you can kind of make a little bit of a, I guess you can say, assumption of what can happen in the next previous trading days. And now when I go into the micro picture, right, a little bit more shorter time frame, it looks a little bit different. Typically on the 1 hour we've seen that bearishness. Now on the micro picture we're noticing it looked a lot bullish when we were on the bigger time frame, but now you see what I was talking about, that consolidation. Yeah, it's slowly steady building up, but we still get a little bit of that sideways movement until last Thursday we got that finally break, which began forming the bullish structure or bullish trend. So when I share this with you guys, I kind of want you guys to understand the differences, because using the macro helps you understand how aggressive either buyers are or sellers are, but using the micro is helping you understand the changes. Is there genuinely a shift from sellers to buyers or buyers to sellers, and how long is this point of consolidation going to last? What are the points of demand? If you notice here, like we spoke on the last video, we have a point of demand at around 335. If you see here at 335, there's multiple points of where share price rejected down, rejected down, rejected down, try to reject down until Thursday it broke out. And then you notice the points of demand, or supply I should say, I apologize. So we have a point of supply at around 320 where share price comes up, comes up, comes up, attempts to, eventually comes up. And that's how you now see, okay, we're in a point of consolidation because we're bouncing between a ceiling and a floor until we broke it, and now we're kind of building now a bullish trend. And of course this might be a little bit difficult to do when you're just starting, but that's why I tell everyone, like, this trading, it's not a quick, I guess you can say, get rich scheme. It takes a little bit of a skill set, a little bit of your time. Oftentimes a lot of people say, well, I don't got that time, but if you're genuinely trying to create that change in your life and learn how to use this vehicle to create income and supplement your month-to-month gains as an individual, this is the kind of the work you want to get familiar with. This is how you want to dedicate your time to getting better and building that experience. So identifying now the micro trend, we see that we broke out of a point of consolidation, and now I have a little bit more of a confirmation of a bullish trend, allowing me now to make decisions for potentially the next 2 to 3 weeks, targeting maybe not this point of previous demand, but maybe something near the middle. So we're currently trading at 341 at the market close of Friday, maybe around 350 call. I can expect this trading week, which would be the third trading week of August, for us to go retest that point of demand. And now I can set my strike price at 350, and knowing that we're breaking towards the bullish side, I know that, hey, I can maybe play it a little bit more midterm. I can, of course you don't want to go short term as an intraday, but if you add maybe a week or two, the potential profits and I guess the certainty increases, adding more time to that trade. And that's how I kind of break down, the macro structure, the micro structure. And if we were to go ahead and see how this week plays out, I'm more than sure maybe sometime during the week, we'll see either that 350 reject but it's also important you are aware of potentially that breakage structure. So now if we see this kind of break out towards the downside using our trend lines, we'll see if we fall below this 340 and begin to fall into this 339 area, we have a point of supply to hold at 335. But if we lose that point at 335, now we can begin to see the market begin to come back into seller's territory. And now this will help you understand, hey, instead of maybe going for those calls to 350 in the next 2 weeks, potentially if we were to break and fall into this 340, 338, 339 level, I can maybe enter puts targeting this previous point of supply at the bottom, potentially 324. I wouldn't go as low as 320, but now you can maybe target puts here at 320 in the same amount of time frame. But look at how trend lines help you understand when you're going from either a bearish or consolidating market into a bullish market, or you're going from a bearish market into now a bullish market, and then you can identify the different changes and structures, and it helps. But of course, it is a dedication of your time, and I guess doing this enough times to train your eye to identify that. So once you're able to kind of understand this on kind of the macro and the micro level, when you're treating this for something shorter term, like a 0-day expiration, it changes as well. And let me go ahead and explain this to you guys. So how to use trend lines when you're trading independent 0-day expirations are going to be slightly different than how you use them for an intraday or how you use them for a swing trade. So here we're noticing a, initial trend line, bullish. If we were to replay this day, right, start to the bottom, I'll notice here, if I press play, okay, we're performing good, we're establishing that bullish trend. I have a point of supply that I marked that down here. That looks like a point of resistance around here. And then we got the top of demand beginning to establish itself right around here. So right here, as soon as I notice that break a trend right here, remember this is micro, this is the 1 minute, this is an independent trading session. Once you see that breakage structure right there, you can know that, hey, we're flipping from a buyer's market to a seller's market. So either you can wait. I recommend sometimes if you see that breaker structure, it's okay to start the position with something light. So a lot of people oftentimes when they see this, they want to jump into a position with a lot of their capital, which is another component that I have to record as well, which is your risk management. But if you're just seeing the breaker trend and you want to test it, there's always the opportunity to do that, but there's no reason to do that with such high amount of capital. So learn to fade into your positions and fade out of them, meaning that you either start with very low capital, which would maybe look like maybe just one contract, some 2 contracts, depending on what your portfolio size is sitting at, but don't feel the obligation to go all in or go big to make the quick money. Test your thesis, your hypothesis, and then scale higher. So you fade in by going light, and then you increase your position size if it retests the top. So I'll give you guys an example of this, right? And this could play both ways. You can play, I enter light, I make the return, or I enter light, it goes negative, I add more, and then it happens, or I add more and it goes even worse, and I gotta manage risk correctly by maybe potentially taking the stop loss. So let's go ahead and see how this happens with just 50 shares, right? Half of a contract ideally. Okay, you notice how we start to break that market trend, and now you see the structure is a lot more, I guess you can say, concrete. There was no need to go adding more, and now, of course, this can help and it helps in both ways. It helps and damages a trader in 2 ways. Depends on your psychology. So it'll help you by 1, if it were to go south, you didn't risk too much of your capital, and 2, it will benefit you because you're able to make that profit and let it ride. But now if you were to go ahead and think about it differently, some traders oftentimes feel like, damn, I should have put more in their trade. And then that impacts their psychology on the next trade. Because you enter with light capital and it went in your direction and you made X amount of money, and then you begin to stimulate your mind with how much you could have made if you put more, you don't want to go down that path, because later on in your trading career, sometimes it'll lead to a mistake, where you start off with a little bit more, feeling a little bit more confident, you're probably in your rhythm, you won a couple of trades back to back, and just that impulsiveness, maybe that trend goes extremely sideways and now you lose. So that's another component that I want to share with you guys. Of course, it's going to fall a little bit more into the risk management, but I want you guys to see that, because remember how I mentioned, it was just a test. It was for me to see if it worked or if it was going to go south, and in this case it worked, and it's not something you want to cling on to and think that your next trade is going to be exactly the same. So practice it as a habit to fade in, but don't look at it as like, wow, this one went good, that means the next one can go exactly the same and I scale up capital. That's oftentimes how a lot of individuals lose money. So now at a point of supply, I'd probably be thinking about taking profits. So I'm gonna close that trade out there, and now you can see how using the micro trend line helps you identify when market structure is going from sellers into buyers, and now let's see when we're going into sellers back into buyers. So I'm gonna continue tracking share price with my trend line. Let me go ahead and speed this up for the sake of your guys' time. And then look at right there. We got the first break. So oftentimes a lot of individuals, not oftentimes, but some individuals will feel that obligation to jumping in the trade immediately. You notice here, we kind of got that first break right there. Let me go ahead and draw the trend line. We got that first break, but look, we might get even just a little bit more of a rejection. So we got a little bit of consolidation going sideways, but now we're more so identifying that true breaker structure from sellers back into buyers. So I'll mark out this point of supply, and once again, I will test the position. So I test the position, boom, boom, boom. In this case, it went ahead and played out back to the bullish side, and you'll use your trend lines to follow until you get that break. And once you notice that break, there's no reason to be greedy, just take your profits. And now you're using trend lines to understand when shifts in market structure are happening, but also when a time going against the trend. So oftentimes the individuals want to follow a trend, and I recommend that too. Like it's a unique situation for every single trade, but sometimes there is great opportunities in what we call is the reversal and the pullbacks. So what is a pullback? A pullback is when the share price is going up and it begins to pull back down. A lot of opportunity is created when you time sells right at that top and then you ride them all the way to the bottom. It's great, phenomenal returns. And oftentimes the rejections, or what we call the reversal, is when share price is going down and then it reverses back up. So there's a lot of opportunity in these pullbacks and in these reversals to create an immense amount of profits. But you gotta know how to navigate them correctly. And using your trend lines helps you, but it's not always a one size shoe fits all. Like I oftentimes will tell you guys, every single trade, every single trading day, every scenario is unique. So you gotta be always kind of on your toes and prepared with sometimes maybe taking the stop loss or just not risking too much capital, respecting the markets, and just conserving, the mass majority of your buying power to not tolerate too much risk. So that's how you use the micro trend to trade an independent trading day. But remember, if you're going to be adding more time, maybe a week or 2 weeks, 3 weeks, sometimes months to your expirations, that's when you go more into longer term time frames, something like the 15-minute, but still scaling to smaller time frames, so you can maybe identify changes that honestly you probably wouldn't see on a bigger time frame. Because if I go to the 15-minute, I still see this as potentially bullish, right? Because we hit this point and now we're still rejecting. But if I were to go into something like the 1 minute, now I can identify even, hey, closer, we lose this point at 336. This is probably a potential opportunity for me to enter puts instead of expecting that continuous rise. So I hope this video is able to help you guys. It was a little bit in depth, and I guess it covered a lot of the basic information that I wish I knew when I first started. And I hope it's not too complicated for those that are taking those first steps, just understanding just this basic concept of market trends, market structure. I did introduce a little bit of the pullbacks and the reversals here, and just so you guys kind of get to warm yourselves up to it, don't let it get too overwhelming. It does take a little bit of time and experience to implement and use this correctly, but I'm telling you guys, everything in life is about putting in the time, the experience, and you will get better eventually. So I hope you guys enjoyed this video. Thank you all for watching. Jerry Trades the SoCal Trading Group. Over and out.